President Biden announced last week to forgive $10,000 in student loans per person and $20,000 if you receive Pell Grants or federal aid for lower income students. The Department of Education will release the application for President Biden's loan forgiveness program in early October. Your income needs to be less than $125,000 per year or less than $250,000 a year for married couples. There's also a possibility of people applying for refunds for the student loans they already paid, but I'm still waiting to hear more details on that. So I did a quick survey on the day President Biden announced student loan forgiveness, and I see the surveys show that most people don't believe the government should forgive student loans, but I've also seen some comments from some of you about student loan forgiveness in several of my videos. Look, if you're receiving student loan forgiveness, $10,000 or $20,000 is not a small amount. And if this is going to get you out of debt completely, I am truly happy for you. If you're mad about it, which I know a lot of you are, I completely understand. If you paid off your student loans, you feel like all the hard work you had to sacrifice was for nothing. And a lot of politicians, including both Democrats and Republicans, are actually against the forgiveness program because it directly contradicts the Inflation Reduction Act President Biden just signed into law by increasing the budget deficit. Let me play you this clip from last week's video about how student loan forgiveness could impact our inflation. According to Committee for a Responsible Federal Budget, which is a nonprofit organization, if Congress decides to cancel even $10,000 per person of student debt, they estimate that it could add up to 15 basis points to the personal consumption expenditure or PCE inflation rate, and it could create additional inflationary pressure over time. And it states that either extending the pause or forgiving the loans or both would undermine the benefits of the Inflation Reduction Act. What I don't want you guys to do is to get so tied up in these politics. I get that some of you are angry, but I want you to use that energy to continue focusing on your financial independence journey so you can retire early. I never got a student loan because I chose to join the military instead of going to college in 2004, and that was my personal choice. So I'm not going to pretend to tell you I know what it's like to have a student loan. However, I did once get myself into $110,000 in consumer debt. So I know what it's like to live drowning in debt and living paycheck to paycheck. I also realized that the debt I owed was my personal choice, and I took responsibility for what I signed up for. I also want to acknowledge the fact that these student loans are predatory. You're not old enough to drink alcohol at 18, but apparently you're old enough to sign for $100,000 or more in student loans without proper financial education. What we owe to the next generation, and the reason why I'm a financial coach, is to educate you and your future generation to know what happens when you take out a student loan. Are college degrees worthless? Not if you want to be in a certain profession like doctors, nurses, or lawyers. But don't let your child take out $100,000 in student loans for a degree that doesn't have the ROI to repay the loan, right? These student loans, personal loans, credit cards, and other debts have set us back several years from retirement or achieving financial independence. And ever since I paid off my debt in 2016, my primary focus has been increasing my savings rate and investing aggressively into the stock market. And I want to teach you who share the same mindset to start investing. And I don't have any courses to sell like many other YouTubers do, because I believe basic financial education should be free for every one of you. You can visit my website at firesidechat.com/contact if you want to download my free financial independence resources like this FIRE checklist that I created. You can also sign up for a complimentary coaching session with me for 20 minutes if you want to discuss your finances by visiting firesidechat.com/coaching. If you're a veteran, you can get a 30-minute coaching session instead of 20 minutes. The only paying services I provide are if you want to become a long-term client of mine to allow me to help you work on your financial independence journey, like creating personalized budgets, savings, and building your wealth. If you're brand new to my channel, my name is Sa, and welcome. So in this video, I'm going to talk about how you can start investing after paying off your debt, like student loans, or having your student loan forgiven. If you still have some debt left, I'm going to give you the tool to pay off the rest of your debt as soon as possible. What you need to watch out for is any increase in lifestyle inflation. Just because you're out of debt with student loans, it doesn't mean you should go to a car dealership and start making car payments, right? I'm going to talk about some things you need to consider before you start investing for your early retirement. Let's say you still have some debt left after $10,000 and the student loan payment pause is extended until December 31st, 2022. The question you're probably wondering is if you should just pile up the cash or continue paying off the debt. The first thing I want you to do is list all of your debt except your mortgage, like your credit cards, personal loans, and car loans. If you have all of those debts, you should start paying extra on those loans while your student loan payments are on pause. I would prioritize the loans that have variable interest rates like your credit cards because the Federal Reserve will continue to raise interest rates throughout 2022. Your loans with fixed interest rates will remain the same. So let's say you have $4,000 on your credit card and you've been consistently paying $200 a month on this credit card since the beginning of the year. Instead of paying monthly, start making payments bi-weekly or every time you get paid. On top of that, find out your minimum payments for your student loans before the pause took effect. If your minimum payment was, let's say, $300 by 4 months because you have September, October, November, and December left in 2022, and then divided by 8 because that's how many paychecks you have remaining in 2022 if you get paid bi-weekly. So that's $150 every 2 weeks you can add to your credit card payment. If you make the room in your budget to just focus on repaying this one credit card with $200 plus $150 from the student loan, you could essentially pay off this credit card by the end of the year. The key here is to take advantage of the student loan pause to pay off your other debts. But what if the student loan is the only debt you have left? Should you save, invest, or pay down the debt? The way I teach is that you should save for your rainy day fund, but only up to your deductibles. If your car insurance deductible is $500, your medical deductible is another $500, and the renter's or homeowner's insurance deductible is another $500, then that's $1,500 total, right? This is the second step of my fire checklist to make sure you have enough cash set aside in case of a car accident or a blown tire, a medical emergency, or a busted toilet that floods your home like mine. And once you have that cash set aside, then you want to make sure you're investing for your retirement, but only up to the employer match, because that's the free money you don't want to leave on the table. And then the next step is to pay off your student loan regardless of the payment pause. I would not invest in anything else right now because you want to get this debt out of your hair, right? Paying off this debt will increase your savings rate, and your savings rate will matter a heck of a lot more than the earnings you make from the stock market. If you invest that $200 and you make $20 in return, well, that's not really enough for fire, right? But what if you could save $500 a month, $1,000 a month, or even $3,000 a month just by cleaning up your student loans? That's when you really start building your wealth. And I always recommend that you focus on one thing at a time. So what if you're done with your student loans and you're completely debt free? Where should you start investing for your financial independence? Meme stocks. Just kidding. Before you start investing, you want to make sure you don't put yourself back into debt again, like credit cards and personal loans. This is when you should start working on fully funding your emergency fund to protect yourself from the unexpected. I am dealing with one right now with a house completely flooded from a broken toilet bowl. And trust me, it sucks. But it sucks less because we have a fully funded emergency fund. This is your personal insurance policy to make sure you can survive if you lose your job due to a recession, you have a major surgery done, or have your house remodeled due to a flood. And you can check out that video about the flood I had in my house, and I'll put that video in the description below. Before you start investing, you need to consider your age, your risk tolerance, and your total annual expenses. This is going back to the first step of my fire checklist, which is to calculate your fire number. I always encourage my clients to draw a personal financial roadmap because you don't just go from 0 to $1 million in a day unless you win the lottery, right? Here are the self-assessment questions I want you to ask yourself to create a roadmap. How much do you have each month to invest towards retirement or early retirement? What is your current age and your desired retirement age? What is your risk tolerance in the stock market? The reward for taking on risk is the potential for a greater investment return, but can you stomach the short-term losses? Do you have a clear understanding of what you're investing in? And can you manage your own investment, or do you need someone else to pay attention to it? I have a lot more questions, but those are more specific to my private clients in my coaching program, and you can check it out at firesidechat.com/coaching. There's not a one-size-fits-all investment strategy because not everyone is of the same age, has the same risk tolerance, or has the same financial goals. Once you complete those self-assessment questions, then you can decide for yourself how much of your portfolio you want to invest in stocks or bonds. How many individual stocks do you want to hold in your portfolio? I know some people who only invest in index funds like the S&P 500. I know some people who invest in the life cycle funds or the target date retirement funds because they want to be more hands-off with their portfolios. I know some people like my wife and me who save over 65% of their income because they want to achieve financial independence and retire early by age 45. And if you want to learn more about investing for your financial independence, be sure to check out these two videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.